Hi, I'm Jim Robbs. I'm one of the partners here at Sassetti, LLC. My background is I spent about 18 years at a larger mid-sized public accounting firm where I was involved in a variety of acquisitions and divestitures of companies. I then became CFO of a larger publicly held circuit board manufacturer. We made 2 large acquisitions while I was there. And then I've spent the last 20 years here at Sassetti, a small to mid-sized accounting firm, and have been involved in a variety of acquisitions and divestitures in the industries that we service.
We hear a lot about various mergers and acquisitions in the news. Does that align with what you're seeing in the M&A marketplace?
Well, certainly the things that everybody hears about in the newspapers and in the news are the mega mergers. More recently, like the Jewel and Kroger potential. But in the middle market, there are many acquisitions that occur every year. There's tens of thousands of companies in the middle market. And what is middle market? Some companies between 10 and probably 10 million and $1 billion in sales. There are statistics out there that suggest that up to 60% of those companies are owned by individuals that are 55 years and older. Puts a lot in the baby boomer range. There's a suggestion that the average age of those companies is potentially the person owning it is 67, 68 years old. So at some point in time in the future, there's going to have to be some transition of the business.
And what are an owner's options when they're in this position?
Well, there's 3 options, one of which is probably not the best for them. Shut your doors and go away. Some businesses end up that way just because there's not a lot of value there. The second option is to look at family or potentially an Esop, an employee stock ownership plan, where you have various management people that are truly involved in the business, as well as maybe some family that you could transition to. And the last option would be to sell. And mostly sales go to either a strategic buyer or to a financial buyer.
Out of the 3 options, generation to generation transition, an ESOP, a debt investor or strategic buyer, which do you see most often?
Well, certainly when you look at generational transitions, very few of those succeed. I think there's suggestion that less than 10% of those actually do end up succeeding. So I guess the most viable option is an outright sale. And to where it goes, whether it's a strategic buyer or a financial buyer, really depends on your business and the marketplace.
What should owners and businesses be doing to prepare for this?
Well, whether it's an owner or a business, they should always be preparing for a sale. You should always be preparing your company to have the best value at any point in time. Some people think that, I want to sell my business. It's not like selling a car or a house. There are preparations that need to be done well in advance of any sale. Sometimes it's suggested that you need to prepare 3 to 5 years in advance. Owners need to work on the business, not just in the business. And I think a lot of people understand that. Working in the business means you're just dealing with operations day after day. But sometimes you have to step back and work on the business. Have you developed a proper management team to take over? I mean, ultimately, you're going to leave the business, but your management team, whether it's operations, sales, engineering, etc., they all have to continue in place. You want to make sure that you have good financial records. Are your financials clean? Do you have them prepared timely? What is the best way to show that the company is got a sustainable financial future to a potential buyer?
And who normally needs to be involved in this plan?
Well, aside from bringing your close family and maybe some of the management team, you really should bring in your professionals. Don't keep them in a silo. You should bring in your attorney, your CPA, your wealth advisor, and then possibly even a business broker. You need to bring that team together so that they can establish the best option for you to be able to sell and to know whether you will want to continue in the business maybe for a couple of years. Do you want to get out right away? Do you want all the cash up front? Do you want to take hard stock in the deal? There are many options, and to have all the professionals at the table is very worthwhile.
So if I'm a buyer or an owner in this situation, how do I find a broker?
Well, I wouldn't necessarily take the first phone call or email you get. I think I would go to your CPA or your attorney and try to identify somebody who's a trusted individual in that area.
Currently, in the marketplace, how long does it take for a deal to close?
I think some people think that this can all happen like selling a house. You can have it done in 2 months or less. I think, to be realistic, I think it's a 6 to 12 month process. I think up front you initially have to do a quality of earnings, which takes some period of time. Your broker has to put together the book to summarize what the company is and where they're going. And then you have the whole sale and due diligence process. So it's easily a 6 to 12 month process.
In anticipation of the due diligence process, what are some questions a buyer should be prepared to answer and documents they should be prepared to produce?
Probably every document you ever signed in your career. Everything from sales contracts, incorporation, any purchase order type contracts. They're going to be looking back at your last 3 to 5 years, and they're going to be going into great detail on who your customers are, what parts you're selling to them, what your margins are, who you buy from, are there opportunities for better purchasing, are there limitations and you can only purchase something from one vendor. They're going to go into great detail over your last 3 years' financial information, as well as digging into some of the legal aspects of your business and making sure that even like a benefit plan has been operated in an appropriate manner throughout its life.
How many buyers do you usually see involved in the bidding process?
I think when you deal with a broker who's knowledgeable in the industry, I think you're going to see that they're going to spread the so-called book out to probably between 50 and 100 companies. They'll draw an interest from maybe 10 or 12, and then generally you whittle that down to the last 2 or 3 based on what their pricing looks like, what their deal structure might look like, and then negotiate from there.
When you're in a situation with a strategic buyer, oftentimes we're seeing a holdback. What is a holdback, and what advice would you give to someone considering a deal that has a holdback as part of the transaction?
In general, you're going to find that there's an escrow for possibly 2 different line items, one being a minimum working capital that's established up front at the closing date, and a second usually is tied to legal type situations. Is there any fraud? Are there any other situations in the business where there are shortfalls from what you had originally predicted? And those escrows can be held. It's usually maybe a 10% escrow, possibly, usually held for a period of 12 to 18 months. In the middle marketplace now, there's also insurance that you can take out, a reps and warranty type insurance that could free you from all of that. That's been fairly recent in the middle market. It's been something available to the big boys, but there are companies out there that now offer that type of insurance in the middle market.
And when you're seeing these types of transactions, these types of deals, are they usually stock sales or asset sales?
Well, a seller wants to sell stock and a buyer wants to buy assets. So you got to come together somewhere in between. And there are situations and structures, tax structures, that kind of combine them both. But I would say the vast majority of deals in the marketplace, in this middle market, somehow end up being asset deals.
Have you ever seen a deal go wrong or not work out to the best interest of the buyer?
I would say yes. There's definitely situations where buyers have backed out because the financial information is maybe not accurate. The future is not as robust as the company may have laid out. In the current times, we're starting to see interest rates rise. There's a concept of potential recession down the line. I think people are getting a little fidgety about the marketplace, so that has certainly turned some deals around at points in time as well.
If you're in a position to transition your business to the next generation, are there certain things you need to do or people you need to involve to have the best possible outcome for that transition?
Absolutely. I think those transitions probably require your trusted advisors to be involved even more so than in an outright sale, because the transition has tax implications, it's got wealth implications. So dealing with that situation up front and having the right advisors, even from the trust and legal side, are very important to that being an overall positive transaction.
Is there anything that one wouldn't anticipate would be a part of the process, but becomes a key part of the transition?
Absolutely. I think an owner goes through a variety of emotions through the deal, as well as after the deal is closed. They have to prepare for the emotional separation they're going to have with the business. And sometimes that's one of the areas that causes a deal to go south. An individual is not really ready to do the deal.
Do you find that it's beneficial for an individual to think about what life would be like after the divestiture?
Yeah, absolutely, and there are professionals out there to help you with that as well. But yes, what are you going to do? Do you have hobbies? How long do you want to stay involved in the business? That could be part of the deal structure. You could stay involved for 6 months, maybe 3 years. Maybe you don't want to stay involved at all. But you need to prepare yourself for what are you going to do in the afterlife.
What are some key takeaways that you'd like business owners to take from this conversation?
In order to provide the best value for your company down the line, it takes planning. And you want to anticipate bringing together your trusted advisors such that you can set targets for the company, its goals, etc., so that you achieve the best value down the line. And to do that well in advance.